Well, you've heard us here at Bloomberg talking about currency wars over the last couple of days, but our next guest says they don't really exist. Daniel Katzive from Credit Suisse is with us now. He's a Bloomberg best on currencies based on his forecast that we keep track of here. So, Daniel, this came out of, as you know, that comment made by the Brazilian finance minister there about the currency wars he sees. Israeli finance minister told me he agrees. You've got comments from Bob Zoellick over at the World Bank who says at least there are currency tensions, if not wars. Why do you think it's not that simple?
I think wars is not a great way to think about it. I mean, a war kind of implies, first of all, that there's something going on right now which is very unusual, not the normal state of affairs. And I think it also implies that somebody is actually being attacked and somebody else is playing defense. In fact, what we have is we have a weak dollar. We've had a few incidents of weak dollar behavior over the last few years. We saw dollar weakness in 03-04, dollar weakness in early 08, dollar weakness in late 2009. And in every one of those instances, you've had central banks and monetary authorities in export-geared economies in a tough position where they have to decide whether they want to basically allow monetary conditions to tighten as their currency strengthens versus the dollar, or whether they want to offset that monetary condition tightening by easing policy or just not hiking as much as they otherwise would have, or intervene. And I mean, the fact is, intervention is happening, but it's not happening in an unusual manner. We don't see a lot of central banks that don't usually intervening. In fact, the central banks that are intervening are those that have been intervening off and on over the last decade. And
you're talking about Japan there?
Well, I'm talking about mostly in emerging markets. Japan has intervened, as far as we know, only once. And they have a long track record of intervening, historically, not over the last few years.
Right, which is why that sort of unusual move has gotten people's attention. Plus, we saw Brazil, slap on that tax to really sort of stave off hot money. So it's got people asking, at the very least, we're going to see more capital controls, if not some sort of, economic coalition of the willing. And then that date of the IMF meetings has people buzzing about that possibility. Do you think we'll see a currency accord at all?
Well, I mean, just on the first point, I mean, I think you could see more capital control type behavior, but that's not new. Brazil, as you mentioned, put a tax on this past week, but they did something similar in October last year. So that's not exactly shocking new behavior. In terms of some kind of accord, I think probably not. I think it's more or less every man for himself. The central banks are going to decide what's appropriate for their economy in terms of policy settings and or intervention or capital controls. But I think it's going to be difficult to get a group as diverse as the G20, for example, to come out with some concrete guidance on exchange rates.
Dennis Gartman says betting on the euro right now is a game of musical chairs. When you're trying to place a bet right now, what is the strategy? I mean, do you go long yen at this point, despite their efforts to weaken it?
Well, I think that if efforts are at all successful in the short term, then you use that as an opportunity to buy yen. If dollar yen traded up above 85, it would be very tempting to sell dollar yen again. And the reason being is that the fundamentals are just so consistent with yen appreciation that it's going to be very difficult for the authorities to curb that.